If you think you need 20% down to buy a home, that belief might be the only thing holding you back. One of the biggest reasons first time buyers never even start is because they assume they need way more money than they actually do. And most of the time, that assumption isn't accurate. Hi, I'm Carly Plummer, and I created this first time homebuyer bootcamp to give you clarity step by step so you can move forward confidently whenever you are ready. This is video 5 of 10. In the last video, we talked about how much monthly payment feels comfortable. Today, we're talking about the other side of the equation, how much money you actually need upfront to buy. I'm here to reset that 20% myth. I hear it constantly. I don't have 20% saved. I'm not even close. I guess I'm just not ready. Most first time buyers do not put 20% down. How much you need depends on your loan type, your price range, and your strategy. And don't think of one big scary number. Instead of thinking about one overwhelming amount, think in three buckets. Bucket number one, your down payment. This is the portion of the purchase price you contribute. For many first time home buyers, this can be significantly lower than people expect. Different loan programs require different amounts, and some allow for far less than 20%. This bucket is flexible depending on strategy. Minimums are 3 to 3.5%, and sometimes there are programs to help with those, and some require none. Bucket two, closing costs. The cost to finalize a transaction, lender fees, escrow, prepaid taxes, and insurance. These surprise people, not because they're not there, it's because no one tells them early and they're not planned for. In some markets, including here in Colorado, depending on the situation, seller concessions can help offset portions of these and down payment assistance. Bucket number three, out of pocket costs. These are the items at closing or before closing, earnest money, appraisal. You don't have to think about every dollar or bucket on day one. They happen at different stages. Another fear I hear a lot is, what if I have nothing left after I buy a house? That's a valid concern. Buying a house should not leave you financially exposed. A smart plan includes maintaining a cushion. The goal isn't to empty your account to get the keys, it's to move in feeling stable. In the last video, we talked about your comfort number, your monthly payment. This is the same principle. Just because you can put more down doesn't always mean you should. Liquidity matters, peace matters. Strong buyers don't just qualify, they plan. And I want to speak directly to something specific. If you're currently living at home and sharing expenses, or your monthly costs are unusually low right now, that matters. Your financial picture is about to shift. It's not about just getting into the house, it's about staying comfortable once you're there. Utilities, maintenance, internet, trash, repairs. We plan for the real version of your life, not just the temporary one. You don't have to have all this figured out before you talk to someone. As a matter of fact, you need to see your options before you can figure it all out. Learning your options does not mean you commit to anything. It simply replaces guessing. If you'd like lender recommendations, I'm happy to send you a few strong options to review. And if you want to talk through what makes sense for your situation before speaking with anyone, that's completely fine too. Clarity first. In the next video, we're going to talk about breaking down loan options, simple and without all the jargon, so you understand what those options look like. Because once you understand the structure, the fear tends to shrink. I'm Carly Plummer, your RE lady, your RE resource, and your first time homebuyer specialist. I hope to see you at the next video.